Hey, welcome everyone. Good afternoon. Hope you're having a great day. Let's make sure you all can hear me. If you would please type the number 1 in the chat box, let me know that you can. I would greatly appreciate it. Thank you, everyone. I appreciate that so much. Let me get my camera going here. One thing at a time. Okay, there. We gotta open it up there. That's more better. Perfect. All right, excellent. Excellent. Hope you're all having a good day. As we do get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So we got a lot of happenings this week. We've got Inner Circle this evening on the 23rd, or the 26th, which is Thursday. I've got the 2-hour training we'll be doing there. Mastermind group is tomorrow evening. Trading You is on the 25th. Monster Market Move is the 30th, which is next week. Cannot believe we're already at the end of this month. It flew by. What is today's date? Okay. Just checking. My wedding anniversary is, my wife and I's wedding anniversary already passed, but this Friday, the 27th, is the date that she and I started to date. Back in, oh my God, so many years ago. I've got something special planned for that evening. So Power Hour Trading Coaches Playbook on regular schedule, as is Power Hour, Cover Call Explorer, and E-mini Think Tank. Here's our followers page. Make sure you are following all the various social platforms out there, folks. We put a ton of information out every single day. Make sure you get your hands on it. We put up stories that are very relevant on our Facebook page. We're constantly doing videos, we're doing 3 to 5 videos a week on YouTube. So there's a lot of good content going up there as well. Here is our Trading Boss Manifesto. This is what it is to be a trading boss, in my opinion. You can download this on the website. You can download it on tradinglikeaboss.com. You can download it on robertjroy.com as well. Monster Market Movers, guys. We're doing that next week. I don't remember the date. But go ahead and make sure, if you're interested in that, folks, if you're unfamiliar with it, give a call to the office, send an email, and they'll give you some info on it. You can go over to Monster Market Movers. Andrew just dropped a link in there. But every month we go through and you will wind up with a series of candidates that are very specifically pattern-based, this pattern, this pattern, this pattern, this pattern, switchback pattern, and so forth. All different patterns. There's about 6 or 8 in total, different patterns that we're looking for. I find candidates that it's setting up. That doesn't mean they're all ready for the next day, but they're setting up for that pattern. So some are ready for tomorrow, and there's a whole list of those. But for your very first one, it's only $49. And this is what I'll do. Andrew, make a note, send this off to Suzanne. Anybody that decides that says, yes, I'm going to register for this today. It's got to be today. Register for this today. If you come, spend the entire 2 hours, send an email and say, I didn't like it, I'll give you the $49 back. I mean, it's that simple. All right. That's how much I know you're going to get out of this training. Oh, I don't want to go into that yet. So what trades did you do today? Drop them in. What, if any, trades came across your desk today? Now, they could be today. They could have been from Friday or Thursday. You know, maybe you didn't get anything off today. That's fully understandable. I don't trade every day. I don't find setups every single day either. Right? So let's see. John's first one in, as usual. Wheel of Fortune on NVIDIA, Google, and beyond. Naked put on Saba. Cash flow of $1,500. Nice job, John. Nice job. Really nice job. Excellent. Excellent. Now, we're going to assume everything is a non-funded trade, so it doesn't matter. Put your trades in, practice trades, funded trades. Win, lose, draw makes no difference. What this really is an accountability tool. It's a way that you're telling out to the world, all the people that are here, exactly what you did, right? And all they know you by is John or Bill or Mary or whomever, right? So while you guys are typing them in, I did two setups today. AMD is the very first one. Let me just make sure this is unscrunched. All right. So I did a bull put spread. I did the 47.48. So I did right at this strike price. I didn't want to go to 46. I couldn't get any money for it any longer. But I did 10 cents is what I was able to pick up on 46.47. And if you sit there and go, Rob, for 10 cents, is it really worth your time? Well, cash in my pocket was 10 cents. divided by cash out of my pocket was 90 cents. That's an 11% rate of return for this week. I don't know. I mean, you may not think 11% is okay for the week, and that's okay. There's nothing. Listen, I am not squawking at you if 11% a week is not do it for you. For me, 11% is a pretty damn good number, so I'm okay with that. Right? And so I was on AMD. Coinbase was the other one. I had a couple of others that I looked at, but nothing that I was really crazy about. We're getting lower highs and lower lows in here. This is looking like it could be the rollover inside of there. So I did the 175.77 half bear call spread. I picked up $1 for it. So, think about it. If you look at the 75.77 and a half, you need overall you need $2,500 to do that trade. But I took $1 in, which means I'm talking 10 contracts. I took $1 in, so that means I only needed $1,500 to do that trade. I needed $900 to do 10 contracts on AMD. So for $2,400, right? If we do cash in, well, let's just do it like let's do it like this. How much would I need there? Yeah, let's do it per contract, right? So we got 10 cents plus $1, so we got $1.10 of credit for our contracts. We needed 90 cents for AMD, and we needed $1.50 for Coinbase. So cash in was 1.1 divided by 90 and $1.50, that's 240. 2.4. That is a rate of return of 45.8% for the day. All right, for week. Sorry, week. They're not day trades. They are credit spreads for this week. Right. So overall, not bad. Jennifer said I made on calls $3,500 on SMCI, CEG a put $550, Costco call $500, Caterpillar call $140. Jennifer, that is awesome. Great job. I mean, you're looking at 3,500, 4,050, 4,000, 4,550, 4,690. That's just this morning, she said. It's over $4,600, $4,650 if I did my math right. Wonderful job. That is awesome, Jennifer. Congrats on that. Yeah, everybody, you can give her kudos. That's good. Nothing wrong with congratulating everybody else. Good job. Good job. All right. So let's see. Interesting morning so far today. Let's go to the S&P. We're bumping our head on ugly. We are running up in there. I'm happy we are making money today. Yeah, you're doing great, Jennifer. That is just phenomenal. We're bumping our head on ugly today. What's ugly? This 618, this horizontal line there. Rob, where did that line come from? I don't remember seeing that. I wasn't around last week. What in the world happened there? How did we get that? Well, we've got our fib drawn from right here, this point below, up to the high on this day right here is our final of our fib, and here's our pullback. So I went from our A is where this fib started, our B is where the fib ends, our C is the lowest low we've ever hit in that pullback. Not an all-time low ever, just since we pulled back off of that high. And then we go from there. And by doing so, it gives me 3 lines. I got a 236, a 618, and then there's a 1 up here somewhere, okay? Once you get through the 236, it's kind of giving you an indication that you're good to go. We're expecting a continuation, especially when you move up, retest like we did here, right? Obviously, I wanted to watch that 56, 51 level to see that we got above, which we did. We blew through it 1 day last week, 2 days last week, 3 days last week, right? And then Friday was a little bit of a pullback. Slight, but it was a pullback. And we're running into that 618. What does that 618 represent? Well, if we scrunch this down a little bit, whatever the move was from here to A to B, that's 100% of the move. Whatever that is, it's 100%. We're looking from C all the way up to this 1 line, which realistically is our D. We're looking for another 100%. So if this was $200 here, and I'm not going to measure it right now, but we would expect a $200 move in here. Now, does that guarantee we're going to get that move? Oh, hell no. Absolutely not. There's no guarantee for it. Absolutely no guarantee whatsoever. Let me just shut this volume off. My phone is being a little bit uncooperative right now. There's no guarantee we're going to get there. It's a target. It's another place for us to look for as an area of contention, right? Right now, we're just bumping our head on that 618. We did break through it on Thursday, just un poco, just a little bit. We got through there on Thursday. Small pullback on Friday, which I call that when we did the Traders Market Intelligence report on Friday. I talked about that not unexpected to see that pullback. Thursday, when I did Power Hour, I made it very clear. I mean, a power option play. Sorry, I made it very clear that I would not be surprised to see a pullback on Friday after the run we had that last week. Great move from Monday through Thursday. It's realistic to believe you're going to get a pullback on Friday. There's nothing wrong with that at all. You know, that expectation. And now there's some hesitancy. Are we going up? Are we going down? What's happening out there right now? You know, there's Fed, which we're going to talk a little about the Fed in a few minutes. There's the Fed out there right now. And even if you look, let's see if we go over to economic reports. Right? There's a lot of reports the Fed focus on. So PMI came out today, right? And it's at 9:45, so the market was open, right? Tomorrow we've got consumer confidence, 10 o'clock, the market's open. Let's see, GDP and unemployment, they're important, but the market is closed on Thursday, meaning when they announce they're closed, not for the day. And then Fed Chair Powell, I found this one interesting, speaks at 9:20 a.m. The market opens 10 minutes later, and these reports are going to be out at 8:30 in the morning, right? Unemployment and GDP. So when we talk Fed, there's a lot of concern of what the Fed is thinking out loud or in private right now of what's going to happen. And I know there's this big contention of Fed dropped rates. It's great for home buyers. We'll see. We'll talk about that in a few minutes when we get into Fed. But we definitely have some reports to be to contend with this week, and quite a few of them when the market is open. If we look at the S&P from a bigger picture, let's go look at a weekly of the S&P. Each candlestick right now represents 1 week. Obviously, today's candlestick represents today, because that is the entire week so far as today. But otherwise, we've had only one bad week, one bearish candle, 1, 2, 3, 4, 5, 6, 7. Last 7 weeks, not counting this week, of course, we had one. No, but we had 3 prior to that. And right from there, we had a great run to the upside. That was a really good pullback in the bounce. Now, when we look at a monthly, and it just depends on your time frame. Remember, we'll look at a daily chart here. My time frame in many cases is today. My focus is what's happening right now, today. You look at a weekly picture and go, oh, yeah, it's pretty good, actually, over the last couple of weeks. Overall, had I just bought and held on, we did well on SPY and the likes, right? And then we go when we look at the monthly chart. And you could see all the way back from where we bottomed out here, and this was October of last year, and then we bounced in November. All the way from November through, and this is, monthly now, so this is September, okay? So almost a year, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 months, 11 candles. We've only had one down month in the entire 11 candles, and that was in April of last year, of this year, April of this year. So monthly picture, man, things are looking good. Now, don't get me wrong. There were times last month that people were not doing well with how the market was going against them. I mean, we were all the way down. If we closed out the month near the high, by the way, we closed out the month at 56.48, but we had a low of 51.19. So 51 and 56 alone, forget the other numbers, that's 500 points. That's a big swing for a month, right? I mean, right now, for the month, we're up 63 points on the monthly. Whereas for the daily, not so much. We're up 9, right? So overall, market looks good. When we look at VIX, but I want to talk about your time frame in a moment. We look at the VIX, we're down 5 cents. There's really no movement on VIX at all. We're still in the low territory. I really can't wait until that bar is gone so I can get a better visibility on the screen. Everything is so darn scrunched because of this long day here. So VIX is really not, we're at 16, 19, very low on our VIX. We've been lower, but nothing that concerns me whatsoever. Right, so where do I see us going to next? In an ideal world, I want to pull back to that 5150, 56, 52 level, which is the confluence of the 8 moving average, and then bounce from there. If we break through, we've got the 8 and then this 5526, which has a confluence of 5528 right here from the 618. Right, on the upside, we're bumping our head on this 5731.62. We've got a high here, 57.33, and we said it's 57.31. So we did break through it. So what's happened? We kind of chipped away at the ice a little bit. We opened it up to say, bulls, you can go. We started the process. By all means, break yourself through there. I think there are still enough concerns about Powell. Traders are still looking at what's going on in mortgage rates, and how it's affecting the bonds and the yields and so forth. Okay. But again, we'll talk mortgage rates in just a moment. But overall, there's nothing in the S&P that worries me today. What you've got to keep in mind is not only is it an election year, but we are just run into the largest rate hike we have had in a decade, over a decade. And now we have to deal with, are we overdone? Meaning, did we go too far? Apparently the Fed feels so with a half-point rate cut. How that translates into our economy and helps the average person instead of helping the bank is a whole nother ballgame. All right. So if we look, let me take us over here. Trading with the Fed announcement. Right. Now, pattern is pattern is pattern. Right. You should not be trying to second guess, does your pattern work or not? All right. You need to find, and if it doesn't, you need to find a pattern that works for you. Just because a switchback trade works for me, that doesn't mean it works for you. Just because Fibonacci worked for me, that doesn't mean they work for you. But you've got to have a pattern that works. So if I look, I don't think I have it open. Let me see. No, I don't. Let me open this up. So if we look, this is the trade with Rob. It goes all the way back to June 25th. Right, we had a stretch there for a little bit where we had no trades were going at all. It was just ugly market conditions. Another couple of days in a row without any real good trades going off. No trade taken. No. Right, we got a couple of them open right now or set up for today for now. And you look at the numbers. Overall, I have put out there 85 candidates in total. 85 candidates. Of those 85, 30 went in our direction, 9 cost us money, 2 broke even, and 44 never came to fruition. Now, keep in mind, if with this trade setup, if you gap away from your position, the trade's over. You don't even, there's no trade, you're done. You're done. So do I expect that I'm going to see half of my trades or so never come to light to trade? The answer is absolutely. And I see that with every setup that I do. Right? It's not every company can set up. I'm looking for candidates in a switchback. I'm looking for candidates that are setting up near a support or a resistance level. And once they do, they're near that level. I want to put a bracket around and say, if it goes down, here's where it's going to. If it goes up, here's where it's going to. That's an ideal setup. The non-ideal setup says, oh, we only have one direction today. We can only trade this one bullish, or we can only trade it bearish. There's no room the other direction. And that's okay. I'm fine with that. Right? I like it both ways, to be able to trade up or down. And that's just based on what the market does. And that's why I trade them as day trades, because regardless of what's going on in the market, I'm able to get in and out before the day is over. Okay. It shows that we're up $216 per trade over 41 trades taken, $850.84 total in P&L. Of course, all non-funded trades, all example purposes, right? For education purposes. The setup works, right? You've got to trade the setup, but the setup itself works. Okay. So with that, you've got to find the setup that works for you first. And then once it does, you've got to have the rules in place of what you're looking for. Now, here's the problem with the Fed dropping rates. Number one, well, let's actually not even go to the problem with them dropping rates. Let's talk about the half-point drop and what historically has happened there. If you look at the previous two times where we ran down to very, very low interest rates, markets went bad, economy got bad, they raised interest rates fairly quickly, sat there for quite a while, and then had to go ahead and start making adjustments to the rates. And you see the rates come down fast, hard, and so forth. And the Fed has not mandates, but they have tools in place that tell them, you know what, we're going to manage the economy based on these things. To make a determination, you need the announcement of that result 3 quarters in a row. And many times, by the time you get the third announcement, the market's already shifted. But that's to avoid any hairpin type turns where they're whipsawing, we think it's going up, we think it's going down. So I get it. But I do believe in today's world of computers and how fast things move, I think we're fairly well antiquated with the system that we use, that the Fed uses for determining when to raise and lower rates. Because of so much data out on the market right now, such as you can go to the Fed and look at what the percentage chance is that there's going to be a rate cut at the next meeting. And right now, today, what the percentage is of being a 0 rate cut, a 1/4 point rate cut, or a 1/2 point rate cut. I don't think you're going to see any 3/4 at all. But when we drop this big numbers, and if we continue to push like this, there's conversations that I'm hearing of a full point this year. And the only reason it doesn't go to 1.25 for this year is because of the election. The Fed will probably stay away from the one closest to the election and not do anything at all, just leave it alone to not sway or persuade the market, or not the market, but the voters of where they're going to go after, who they're going to vote for in the election. So, and that's normal to see. October is going to be a precarious month, period. You've got rebalancing of mutual funds takes place there, right? The mutual funds have to show where their top 5 holdings are for that month, in that month. And that's when there's a lot of rebalancing of portfolios, get rid of the Billie Jean Bob's screen door repair and bubblegum manufacturer, even though it's made you 7,000% this year. Get rid of that and put in Wrigley, Costco, Home Depot, Nike, big names, well-known names, Apple, right? A lot of the techies. People looking for Apple, looking for NVIDIA is a very big one right now, and traders are looking for. And we've got all of these concerns with what's coming up with the Fed, and we've got Powell coming out and speaking right after the reports this week, the week after, right as the market opens, which I found to be a little bit crazy. But when you look at what the Fed has done historically, it does not bode well for the economy, right? That the inflation increase, which caused them to raise interest rates, make it more expensive to borrow money, right? And then it's all a matter of, is it a top-down push or a bottom-up push? Meaning, does the money get put to the top of the food chain and funneled down into the economy? That means giving it to big business. Or does the money get given to the individuals and they spend it in the economy? There are different historical views of this. I've done some research on it and found that the top-down approach, the economy comes out better. Whether or not more people have more money, save more money, buy more houses, I don't have those answers. I just know what the economy tends to do when the perceived direction the country wants to move in is giving the money up on the top and letting it funnel down. Businesses will build more factories and hire more workers and so forth, versus giving it to individuals who, will they spend it in the economy? Yes, but it is not spending it in the economy. Just spending it in the economy is not the bottom line. The bottom line really comes down to How is it spent in the economy? You know, if somebody takes those monies and they go and buy a house, right? They're going to take a loan, right? So they're hiring a bank, they're hiring a realtor, they're hiring an inspection company, they're making payments, they're going to go to Home Depot and buy some stuff for repairs, they're going to hire contractors, versus someone takes that money and goes out and spends it on weed, right? And I'm not saying they're spending what they're going to buy a house with on weed, but if that little extra money that you were given gets blown on things that are not going to continue to circulate the same way that, you know, money spent on a house it's going to touch a lot more hands on the way down. It's higher up in the food chain than I'm going to go to the grocery store and buy some bubble gum. Don't get me wrong. Stop and Shop or Publix or whoever your supermarket is going to love you for it, right? But when the money pushes from the top down, you tend to see a better economy because of it. So how that all pans out is right now a concern for individuals, because we don't know what's going to happen through this election. I have not found one poll on either side that I believe. Oh, this one is up 62% to 38%, and this one is no, it's the other way around. They're 75% and 22%. Yeah, I don't believe either one of them. Right? I just feel that there's way too much fluff inside of these and how they're being done to trust them. So we don't have an answer. Hence, Wall Street does not have an answer. And individuals have been relying on these rates coming down so they can either sell their home. Well, why can't they sell their home with the higher rates? Because people can't afford to buy them. They can't afford to buy it. It's too expensive. So people have been relying on the rate coming down, the Fed coming down, so rates will go down. Well, the Fed went down last week. And this is the current September 20th, 2024. So as current as you can be, okay? That was Friday's date. Interest rates. 30-year fixed, 6.983, and it's blue. Look at this blue line here. Let me grab a pen. I'm going to get a red pen. This is 7% right here. This line is 7%. We've been there for a while now. Maybe a slight dip, but nothing that says, ooh, we're at 6 3/4 now at all, right? You can get much lower, of course, if you're on a 15-year fixed. Problem is most people can't afford 15-year fixed. And if you're an investor, you're not doing 15. Most investors tend to go after a longer term, more cash flow now. You'll build up the equity in the home. You'll sell the home, refinance the home. But it's about generating cash flow. I know we bought properties. My brother-in-law and I, our family bought together, and I allowed him to convince me into a 20-year rate mortgage. And yeah, it's great. The properties are pretty close to being paid off, but now we're at the point we're getting ready to sell them. So it didn't really value us any to not get the cash flow along the way, right? We got some, but not what we should have gotten. And all it took was one tenant to decide I'm not paying rent through COVID, and all hell breaks loose with something like that. So rates from the banks are not coming down. But wait, if the government dropped the rate to the banks, why aren't the banks dropping the rates? Well, you would have noticed that rates came down a little bit, right? As housing stalled, right? If you look, I'm gonna grab a blue pen this time. If you look, we were here at maybe 7 1/4 back in the end of July, beginning of August or so. And now we're right about 7. So it's come down 1/4 point, but the rates didn't drop from the Fed. The banks did it to stimulate business. So the Fed's drop is not pushing directly into mortgages. Okay. So, well, what are we looking at then, Rob? To me, it's a standard that happens every year. Every time we get rate hikes like this and then rate cuts, it's a very standard process of what we go through. And especially when it happens to be around election periods, it makes it worse, without a doubt. Because a good Fed, I'm not saying Powell is or isn't good, but a good Fed will not raise or lower rates right around the Fed, around the announcement of the election. They will not announce anything because of that potential swaying of the market. Let's see. Jennifer said, my understanding is the Fed 50-point cut is for shorter term instead of 10 plus years out. Yeah, well, but it's what the banks borrow money at. That's what it comes down to. When the Fed raised rates, the banks were very quick to raise rates immediately. They jacked them right up, right behind them. There was no, well, we'll wait a couple of, they jacked those rates right up, right? And they've done it all along as rates have gone. But it does have more effect on how treasuries, whether it's a 10-year, a 2-year yield, a 30-year bond, it definitely has more effect on that. And I know Tripp has done some extensive training on that in Inner Circle on the Fed and the yield and so forth. Okay. Yeah, and we don't know who they're trying to help, right? So yeah, who does the Fed help? Is the Fed concerned that if they don't help the current president, that the new president's going to fire him? Well, the old president could be the new president, and he was one that brought power on, right? So I mean, it's iffy. Right, exactly, Jennifer. Jennifer said I did see bank rates move down ahead of Fed, so they probably do what they want. Yeah, they did. And they had already dropped them. And like I said, the end of July, beginning of August, they'd already dropped rates, even though we knew there wasn't a potential for rate change at all because there was no August meeting for the Fed. There wasn't a meeting until September last week, right? So how do we trade this? How do we focus on this going forward? I think right now you need to pick a lane, and you could have 2 lanes, but if you do, it's just a little bit more work, but you need to pick a lane. If you are pure tech, if you're an Amazon, a Google, Nvidia, Netflix, if you're a tech trader, you need to get very hyper focused on the NASDAQ and the Qs. And the Qs need to be something that you are looking at daily, right? And here's my reasoning behind it. And if you are more of a broad spectrum, I love tech, but I am not opposed to trading a Goldman Sachs or a MasterCard or, MasterCard, some will say it's tech. I don't really consider it tech. If you consider it to be, so be it. That's fine. We can still be friends. It's not a big deal. But Home Depots of the world and so forth, I have no problem trading those. Retail, going after a Walmart or something like that. I love trading those types of companies. I tend to look more at the S&P, which is the broader spectrum, where the NASDAQ is very focused on that tech side. But you need to get very good at dialing in on what the market is doing. If we were closed right now, and I'm sitting here today, and I'm looking, markets closed, and I'm looking at the S&P 500, the first thing I'm going to say is we are in a bullish bias, and we're true bullish, meaning the moving averages are in the right order, right? That's number one. Number two, we're at a rank of 2. We're close to the fib line, but no moving average near it. So the best we can get is a 2 as a rank. So I could take a bullish trade, but it would be aggressive. I would only take 4 contracts. Okay. If I would normally trade 10, I would just take 4. Then I'm going to come back and say, where do I see the market going to? Well, that 57.31 is the next upside target, and that 57.96 is the one from there. To the downside, 56.51, and there's a confluence of the 8. And then 55.96 is where the 21 moving averages. I always pick 2 targets up and down in there. But the bigger part of it is, how am I going to trade it? Right? So if the S&P starts to fail tomorrow, right, or today, whatever it is, but starts to fail, am I going to take the downside trade? I need a pretty strong failure reason for me to want to take that trade. In other words, it can't just be the S&P is down 12 points. That's not a reason to take a trade. Reason to take a trade is the Fed just had their announcement tomorrow at 9:20 a.m. Eastern. Powell spoke and said that after further consideration, as far as we're concerned, the United States is in dire straits, and we expect the average person is going to lose 50% of their net worth over the upcoming year. Right? Well, there's a reason, right? The market's going down. Okay. And it doesn't need to be that bad, but you get the point, right? It can't just be, well, we got a bad day today. So we're still bullish. There's nothing that says take the trade bearish. For me, the bullish entry comes in, though, if I break above the 57.31, retest and bounce, I take the trade, right? And 57.96 is resistance. My target will be somewhere down below. My stop will be down below the fib line that's there. I have a plan. I've laid out an exact plan of what I'm doing, right? Every single step of where I see happening or what I see doing, I've got. Now, can the market be down? And I have stocks that are moving down that are bearish. Yeah, then I'll look at those stocks without a doubt. Right? Without a doubt. I would look at those companies. In other words, I am not opposed to trading opposite of what the market does. But hear this loud and clear. The average individual, right, should not be trading against the overall market condition. Here's why. 70 to 80% of the time, 70 to 80% of all stocks will move in the direction of the S&P 500. Just trade the direction of the S&P. Trade the overall direction. Don't go after this and say, I'm just going to trade everything, right? I don't care how new I am. The market's going down. I'm going to trade up. I'm going to trade a bullish candidate today. Yeah, and it might work. I'm not saying it won't, right? And I'm not saying that someone should not be considering trading opposing views of what the market is doing. But if you're not experienced enough yet, you might be better off backing off on that day and waiting for a day that you get a solid decision. Yes, we broke out above that 57.31. I'm taking bullish trades today, right? I think you need to be very, 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 very diligent right now in picking the right entries at the key points. I think there's too many opportunities right now of whipsaw of uncertainty from individuals in the market that we don't want to get you on the wrong side of that trade. And just as I mean, how early of an announcement is this? I mean, we just finalized we just got a yes. I got a yes from my team today on this. There's a trade that we do in Trade with Rob. It's called a switchback trade. Basically, we have a stock that is near a fib line, any fib line. It doesn't matter what the fib line is. So we close right here today, maybe a little bit higher. We close right near that 534. Two different ways to take this trade. We break above, retest, and bounce. We take the trade after the bounce. You got resistance up here. Your target's going to be somewhere down below. And your stop will be down below that 534 level, right? If it moves up and fails, right, we're going to take the bearish entry off of the failure. Support is down here. Your target's going to be somewhere up a little bit higher, and your stop is going to be set up there, okay? That's a switchback trade. This is a great setup for a switchback trade. No doubt about it. But I have a very specific way that I tend to trade this, that I like to trade it, that doesn't fit everybody else's model. All right. And when I say that I like to trade it, it's the only way that I teach it. I don't know a date, but I will tell you this. Coming up, and it will be this year. Coming up this year, I'm going to be doing a live training. All of our mastermind groups, I try to do as much bonus stuff as I can for anything mastermind inner circle, and Trading You has now rolled into a mini mastermind group, right? You're going to see some changes coming out from that in the beginning of the year. I'm starting to institute some of them now. So we're going to take everybody that's in Trading You, everybody that's in inner circle, everybody that is in mastermind group, and I'm going to invite you to this for free, to this premium workshop on how to trade that exactly. And we are going to record it. Those of you that don't attend live, you can still get access to it by registering for Trade with Rob, which just means you're going to receive an email on whatever days we put up a video. You're going to get an email that says the video is done. But there'll be a members area that video will be housed in that members area. So everybody will have access to be able to see it, but only if you're either in one of those three groups. And the important thing there is you get to ask the questions live. So you get your questions answered. So Rob, how do I get in there if I'm not there? Register for Trading You. That's the easiest, least expensive way to do it. And I think everybody should be in Trading You anyway with the stuff that Tony and I teach in there. It's just monumental. So I think everybody should be there. But we're going to do that sometime this year, right? I don't have a date. You're not going to see a lot of emails on it. If you're in one of those three groups, Trading You, Mastermind, Inner Circle, you'll get an email that says, hey, Rob's doing this on X date. You're going to get, and you'll get 2 or 3 like that, but you're going to get that email and it'll tell you, don't worry, you have nothing to do. Just show up. You'll be registered automatically. All right. There will not be there will not be a page where anybody in those 3 groups can go back and watch this video. I won't have that. That's only going to be housed on the Trade with Rob members area. And anybody can get access to that for free just by registering for it. All you're doing by registering is saying, hey, send me the emails. That's all it is. And since I put these out a couple of times a week, the trade with Rob. So this week did the 18th, the 19th, and the 20th, right? So I had 3 of them for last week, right? Then we had 10, 12, 13. We had 3 the week before, right? So that's my goal, is to try to get 2 to 3 a week out there to you. Schedule doesn't always permit, but there you go. I appreciate that, Andrew. Andrew dropped a link for Trading You in there if you guys want to check that out. So you need to have, and this will be a system that you can trade. That's what I'm getting at with this. That's why I'm bringing it up at this point. If you don't have a system to trade, this is a great one to do. And I put candidates out for free every day on this, or again, a couple days a week for free on this. So you've got plenty of opportunities in there for them. You get 3 candidates. Each time I put them out, I put out 3 out there. So you need to have a very specific setup in mind. You need to be looking at short term, and ideally, you're very focused on either the S&P or the Qs. If you're more experienced, both of them is fine. You're focused on one of those 2 models, and you are trading that component as well. What do I mean by that? If you're focused on the S&P, you're trading the SPY. The SPY moves $7.50 a day, intraday, and how expensive are the options on SPY? Let's see. SPY, it's Monday, first day of the week, right? Trying to get it. Move. Okay. Partial, not partial. Okay. Don't know. It doesn't like me today. There we go. So remember, we have daily options on SPY. So if I'm trading and I'm day trading and we're up a little bit. So let's just say you're bullish. I find that 65 delta. I got a 66 delta. I could trade this option for $1.36. If I had to go to the next higher delta, the 79, let's say that other one was only 62, I go to an 80 delta, it costs me $2.12. If I do the exact same thing on the Qs, it didn't change. Okay, let's try it again. Q. All right. Here we go. Okay. So we do the exact same thing on the Qs. All right, here we go. Let's go look. We're up a little bit, so we'll go look for that 65 to 85 delta. I got a 74 is where I have to go to, $2 to get in that trade. So remember, there's only 1 day left, and it's till this expiration. If you're day trading it, they're not expensive items. If you're looking to swing, not to swing, sorry, you're looking to day trade it, or swing trade it, but you want to be out this week. If we go to Friday's option, we find that 68 delta, 68 delta is going to cost us 6 3/4, almost $7 for the option. I'm very much about day trading it, right? Over and over and over and over and over again. That is what I would prefer, is to day trade it. All right. So the Fed itself, after dropping the rates half point, they're going to make some decisions. You're going to see some announcements come out. These economic reports that I just brought up to you and pointed out, anything that's consumer confidence and unemployment, things like that, Fed is going to focus on those very heavily and determine, do I need to drop rates more from that? There's, another half point considered for the rest of this year. I don't know, with, again, the election. You might only get one more drop. I don't think they'll do another half, but then again, I didn't believe they were going to do the half the first time. I think it's a show on the Fed side of, we waited too long. We should have did a 1/4 point last month. That's the way I perceived that when I saw the half. No matter how good of a political job Powell did to brush it off, that wasn't the case. Okay. So a lot of opportunities here, but because of the election and the rates, you just got to be a little more careful, a little more cautious through the process. Okay. All right. Excellent. So we've got a little bit of time left today. What candidates do you want me to take a look at? Remember what the purpose of this section is. This should be, you know what, Rob, I'm considering looking at a chart of this, or I've looked at a chart of this, and I want to get your feedback on what you see. Right? So John asked for Micron. So drop your symbols in. Let's see, some scrunch. All right, there we go. So it's been a ugly ride. I mean, we went from $1.60 down to 90, 93. We are, got today's data on there. We broke above the 21. So realistically, we wind up in a neutral bias right now. If I can get a push up, a retest, and a bounce, we're looking at 100, 102 quarter, 102.05, somewhere in that range. Are going to wind up being our target. We should have a blue zone in here. It just shows confluence between those. They're so close. It's just an area of confluence. But I'd be targeting at 100 as resistance, getting in this at about 94, 94 and a quarter, getting out of it about 99, 99 and a quarter, somewhere around there. Downside, nothing until it breaks and gets back to bearish. Oh, wait, there's more. You got earnings coming out. Check it, confirm it, but it shows the 25th here. All right, so John's saying, looking at 85 for a naked put. Well, we're already at 93. Right? So looking at the 85, if you, and when I said already at 93, if you can get enough premium, that would be great. I just don't know what they're doing for premium that far out. And you got earnings. So if this is accurate, it shows 925. And you should always check, folks. Always check. I mean, I'm a big fan of Earnings Whisper. Right? MU. September 25th, check mark means it's confirmed. Right? If there was no check mark, so if you put Tesla, there's no check mark yet. See, the earnings date has not been confirmed with the company. So they're estimating when it's coming up. Right? So you got earnings coming up, John. So you got to make that decision if you want to hold that through earnings, because the wrong news could put you underwater quickly. So you got to be careful with a setup like that. Gene asked for Tesla. John, I hope that was helpful. Let's see, get a little more time. You're quite welcome, John. Pull this out. I'm a big fan of Tesla. Last week, I had an appointment with my cardiologist as a follow-up from my pre-surgical authorization I got done. I just wanted to check with him on a routine that I want to do and make sure that it was okay with him. So I went in, and the first 20 minutes, 25 minutes, we're talking about Tesla only. He's a big Tesla owner. He's got thousands and thousands of shares of it. Every time he asks, do you think I should buy more? It's the biggest part of his portfolio is in Tesla, right? And then for 5 minutes, he goes, yeah, you can do that. Don't worry. You're good. You're clear. You can do it. No problem. Piece of cake, hearts strong, go. I love the position that Tesla's gotten into. I love that we're seeing the moving averages spread out. We broke above today, that 246.5. Love that part as well. But we're in a position now, where do we take the trade? Getting a pullback all the way down here to 231, that's a lot. A retest and a bounce off of the 246.5 is possible, with 258.75 as resistance. So probably 257, 56.5, somewhere around there would be my target on the upside there. Okay. So I like it a lot, but I need to move somewhere. Would I take the downside trade? If you're doing a switchback, I'm okay with it, but preferably if you get a bearish day in the market, or else I wouldn't take the bearish trade. All right. That was Gene, I hope that helped. Steve's asking for PAYX. Paychecks. Steve, you may want to revisit Chipotle soon. Let's see. Let's pull that out a little bit. So I had a channeling pattern on it. This was just a phenomenal channeling pattern. Man, this was awesome. It was just a great setup. Even when it broke out, it went right to our next lines. Over, and it didn't make it all the way down. It stopped in the middle. It went there, a little higher, came back down again. Nothing's ever perfect, right? Tested it, again, lots of hesitation there, tested it again, back here, back here, back here. So it's done well for itself up to this point, but it looks like the channel pattern we're going to pull back on a little bit. And let me this down. Okay. So we're going to draw a fib. From here to here, we got a little hiccup in the center there. 29.5, 131. Yeah, it's just not that big. It's too small. For me, it's too small of a number in there to want to. The fib is not big enough. There's not enough distance in between the 50 and 618. I want to see that be at least $3. On this one, we had $2. 29.5, 31.5. It should be at least 27.5 to 29.5. Close enough. $2, right? It should be at least 3. So there's just not enough interest there for me to be to have a fib on there that I'd like. And Steve did indicate that they had earnings coming up on the 1st, which is right there. So if we go back and now let's look at it historical, Steve. All right, we've got a lot of resistance in that 139 area, 140 area. So I mean, we're good there. What did? That's my last line on my channel, so that's gone. So we're that resistance, Steve. So we're going to be back at that 136.5 is where I see it next. From there, like I said, back at that here 136.5, 139.5. Those two levels are the two targets I would focus on. But we just don't have a big enough move yet on a run to draw the fib, and I hate drawing it from down here with. I mean, we could. It's just, and you're going to get fibs that aren't just, they're just not very clean, right? That's going to be this. So now the distance between, even there, 23.80 to 26.40. It's almost $3. It's still not even enough. But if we're focused on it from that side, Steve, 137.5 is resistance. Right? So a little bit of caution with it. I'm just going to back it up because I'm not excited about it. I'm going to take it off. I'm not excited about it. So sorry I wasn't more help with it there, Steve. It's not giving us much with the run that it's making, and there's just too many little pullbacks in there. Brenda's asking for Amazon. All right, Amazon, I need a new fib on. Same thing. The fib is already old because we blew through the 882 at this point. We got 194.5, 199.25 above head, Jennifer, for both of, for that one there. And then she's also asking for GLD. Let's see. So gold hit an all-time high again today. Right, so 242.83. This is a trust, so it's an ETF type format. And I do like it a lot. The position I like, not per se where it is today, right? 240 to 250. Yeah, we need to split that in half. We need to add a -5. And then we're looking at 25 to 36. We need a -136 and 118. Okay, so now we got our lines in there. Okay, that's good. We can get to ship. I need a pullback on this one, Jennifer, down to the 240.87. And not exactly to 241, 241.25. Pull back a little bit, bounce, 245.75 resistance. I'd be 244, 244.25, half maybe would be my target. Stop down below 240. 240.87, down below that fib line. All right, I hope that helps, Jennifer. And Jeff is asking for ARM, ARM. All right. Apparently haven't looked at this one in a bit. So let's do this first. I'm going to measure the distance of that fib, and it's 94.5. Right? I'm going to duplicate that line. No, I'm not. I'm just going to do it this way. We come back here. We've got this pullback right here, that swing low to that swing high. And we're looking at, to that level, we got 91.69 versus 94.5. Right? So it's not really bigger. We are 8 months in now, 7 months of fib. So we don't need to redraw. If I went all the way up to this one, we would, but I don't need to redraw based on what we've got now. All right, so that the fib is fine then, Jeff. Yeah, okay. You got it, Jennifer. Let's see what we've got for fib lines here. 41 to 64, 13, 12.5 points. We got 16. We don't need a fib in there, right? So I like where we are. Now let's kind of bring it in. I like where we are, with the exception that we had a high, slightly lower high. Bottoms are holding well, right? So we're doing okay on the bottoms. Tops are coming down, right? So that's my biggest fear there are those, right? Bottoms holding, tops coming down, a descending triangle setting up in there. So what I really need to see happen here, where I need to pull back towards that one. You can go a little higher first if need be, that's fine. But pull back to the one towards 146.5 and bounce. And although I don't have a Fibit in here, I'm probably going to target the recent swing high as my first target. So 149, I will call it 150 as resistance. 149 would be my target. I've got plenty of room to the upside there. I've got some good strength on the downside. All three moving averages are hovering right in the same location. So we definitely have some potential in there. It's just, I wish that we were able to get up towards that 164 and not have to look at that recent swing high on ARM from just about a week ago. So I hope that helps, Jeff. So on Amazon, Steve, I'm still trading it only as day trades, right? But we are above the fib. So we're going to use the previous fib level. So my next level is 194.5. So retest and bounce. And if we look at today, Amazon on a 5-minute chart, it opened up, gapped up, and stretched down at sometime inter candle. But now we'll look at a 1 minute, and we ran up. We closed here, right? So we're gonna look at that black candle right in there. Where did it close? That was 191.04. Okay, the low was 191.01. The fib line is 190.60. So we're only about 45 cents higher than that line is where we closed. So we closed close enough to it. On the 1 minute, we stretched down and we bounced. So that pullback and bounce was enough to say, yes, I want to take that entry. I want to take that trade. Okay. So for Amazon, you know, we're going to be in this one about 191.5. And right now it's at 193.25. Right. So yeah, I'm fine with it, Steve, as long as you're focused on the previous fib lines as targets. Jeff, you're quite welcome. All right, everybody. Hey, we dropped a bunch of links in there. I'm going to leave the room open for a minute. We're going to wrap it up. Go ahead and grab those links, get registered for some of those free trainings and the likes. If you're in Inner Circle Mastermind or Trading you have nothing to do when we get the class set up, and you'll hear more about it. When we get the class set up, you will automatically be registered. We'll send you an email, and all you have to do is show up. It can't be any easier. So everybody have a great rest of your day. God bless, and I'll see you all at our next update. Take care, folks. See you then. Bye.